This is the MTPredictor weekly market update for October 13th. I've got the S&P chart up here. We'll take a look at a few of these, and then we're going to look at some other stuff today, some other stuff I came across, and a little what I call the option candidates here. We're just going to look at some stocks, give you some food for thought, some ideas on the coming time between mid-October to the end of December. In that time period, these stocks have done well. We'll talk about that in a second. All right, so this is the S&P. We're on the daily chart here. Let's go up to the weekly chart. Again, map out our major support and resistance on the larger time frame. I'm just going to take our decision point tool here off the last swing high, and this gives us a major weekly support. Here's your last swing into that high. We'll take a decision point off of that level. Here's the next here's the resistance. Here's the next major support. I might have gotten that backwards. All right, so let's go back to the daily chart and look in terms of where we are here. And you can see here we had the market rally into that weekly, this is the daily chart now, into that weekly decision point resistance area. So this is a major area that we would anticipate the market or the trend, which was up, may turn and become a trend in the downward direction, or at least correct to some degree. All right, the other thing we had, if you look here on the this neutral candle, this black candle here, is the high volume spike. Again, this gave us a heads up that as the market was moving higher here, that the unusual volume activity happening during this particular day was actually professional selling coming in. And the reason, well, we wait for the next candle, which is the red seller's candle. This red candle tells us or confirms that in fact sellers are now overcoming buyers in this resistance area. So again, some of our traders maybe short this. It's gone about 5 times your initial risk is what it's run so far. Now the next major support is all the way down here, the weekly decision point off of the last swing into that high here. We had this rally. Obviously, we knew, I think we talked about this before, that we were going to anticipate them buying the dips and then awaiting news on a resolution to the government shutdown, debt ceiling, all that stuff. Well, there was just a rumor, if you remember last week, that a deal may get done. It was just a rumor, but it ended up creating a short squeeze. Obviously, the reality is the shutdown is still ongoing. So we just look. Let's just right-click, choose Elliott Wave Intermediate, and you see we're in this. We've come into this Wave 2 or B potential resistance area. So we're going to see if this level holds as the shutdown actually continues. If this short squeeze is done, and let's see if things roll over again. If you are short, you haven't taken profits yet, then certainly you can have your stop to break even. As quite a while ago, the 100% initial risk line was achieved, so you can probably should have already had your stop to break even anyway. But like I said, plenty of room there for some profit taking to the tune about 5 times your initial risk down to the near the low there. If we look at the, let's just look at the Dow here. The Dow, you can see I put the same weekly levels as the daily chart of the Dow, and it didn't achieve the weekly resistance. Let's show you that here. Now this is the daily off this swing, in which the Dow did get into resistance. But the real reason that this rolled over was because the S&P, basically, the S&P is the boss. It found its resistance from the weekly time frame and rolled over. You had some daily decision point resistance here, not quite into the weekly, but you can see the Dow, a little bit the weaker market, and where it was in relation to the weekly decision point support here. That would be a potential target. Now, again, if we look at the first candle here, this actual blue candle into this daily resistance. Again, the high volume spike came in, giving you a heads up that professional selling was coming in, confirmed by the red seller's candle there. And again, if you're setting up this trade and using this decision point as a target, that's 9 times your initial risk. Now notice they had the high volume spike that came in on this particular day. And let's just put the crosshairs on here. This high volume spike came in on this candle, followed by the blue buyer's candle. So a good heads up there to perhaps protect yourself in case they did take out the high of this, and that is professional buying stepping in. Protects you to the tune of about 7R there. Worst case, we didn't have strength on the STF. The STF, this oscillator was not into this gray band at the bottom here. But the other option was maybe trailing with the ATR trailing stop here for about 4 times your initial risk. Either way, nice trades there. Nice to get the heads up that professionals were stepping in, confirmed by the blue buyer's candle there. So hopefully you can protect profits there. Now we'll just have to wait and see again in some resistance here in terms of the daily chart. Is the that buying frenzy on the rumor over? Do we roll over again and retest these levels? We'll see. In terms of the, I'm going to go back to the S&P here just quickly. In terms of the, let's go to the ES and let's go to the monthly chart here. Monthly chart. Here's your last swing. Take that decision point off of that last swing high, and you can see we are in a major monthly resistance area. It's a big area. It goes above 1800 in the S&P, around 1830, but we are in that area, and that is another area where we anticipate that the market, as the trend is up, may find resistance here and roll over and become a trend in the opposite direction, or at least correct. So now to the weekly chart, you can see that monthly resistance area up there. Here's your spike this last week on the rumor there. Again, we'll see how this unfolds. So we've got some overlapping. You've got weekly resistance that we sold off from, and we're in a major monthly resistance. So not out of the woods yet there. Let's just look at the NQ. This is the weekly chart here. Just checking the pattern. Again, there's your wave 5 pattern on the weekly chart up. So we're in the typical wave 5. This is an area where you could anticipate market could correct. Here on the daily chart of the NQ also you see that not pretty but little 5-wave pattern up that did correct back to the wave 4 DP there. And again, your buying that came in with the high volume spike here, giving us a heads up on this particular day, followed by the blue buyer's candle. That may be professional buyers stepping in there, and some pretty good fall through there. So we'll see again in these markets if the kind of short squeeze is over, if we roll over again, or if they're going to continue and just take out these highs, and we'll penetrate further into the monthly resistance levels. Alright, let's look at gold. This was the daily chart of gold, and remember this was our standard trade setup, the TS4 sell signal there. Again, the target was a pretty large one. What happened last week in gold and silver was the that supposed fat finger trade. Anyway, some type of situation where either it was the technology that failed or somebody that failed and pushed the sell button there, and gold had a nice spike down as well as silver there, and you can see that visually here. And so down the target there on the daily chart, 1148, sitting around 1268. We talked about last week this level here. Some of you may have, because of the this little ABC, this pattern of this sell-off unfolded as an ABC correction. So some of you may have come out around that 1324 level on the short as a some protection there, right around that area. All right, and that was 4 times your initial risk, and you're out. Nice trade there. If you remained in, if you just maybe have your stop to break even here, all right, so we get a nice move in the favor, and you've got now about 7 times your initial risk in, based on the close there, and then again the target, ultimate targets down here on the daily chart. This is where we had the nice wave 4 pattern in, and we projected our wave 5 down using the tools and the software to give ourselves a target, and some are short this. So let's just project this down and set this up. There's our minimum wave 5 target, and we use our risk reward tool here to check all the numbers. This one should be just 2R there, which is, you know, the minimum reward size that we look for. And so again, this one is one you can have your stop to break even now. I'm sorry, I take that back. The 100% initial risk line has not been achieved yet. So once that is achieved, if that is achieved, then you can move stops to break even there on silver. Once then we can see if it'll finish out down around the 1750 level in silver. But nice pattern there, and we'll just got to see this if it can get down to 2020, then stops can be moved to break even there, and just see if it'll finish out. And we looked at gold and silver today. You know, I was looking at some articles. This one was just from Yahoo News. I don't know if anybody caught this, but we know this has been going on in the background, that these BRIC countries, Brazil, China, Russia, India, and so forth, are all looking for ways to trade outside of the US dollar. This has been happening for a while, sometimes bilateral trade between countries outside of the US dollar. We know, you know, Gaddafi was trying to develop a gold-backed dinar so they could trade oil in the Middle East and things, and of course, you know, we know what happened with him. But this was an article that came out from the Chinese media, and this is the first one I've seen like this, where the media there has actually come out and say, and basically, you know, saying what they're feeling, what they're doing behind the scenes. And we've seen the big shift from gold moving from the west to the east. You know, Russia and China, big buyers of gold, and so, you know, this article, you know, talks about how they are you know, ready, or saying that they are basically looking towards the future, where, you know, the dollar is not the reserve currency of the world, and they say it shouldn't be, that our time is over, and you know, a new world order basically needs to take its place. So interesting article there, and again, this is why if you are using gold and silver as a hedge against governments, against mismanagement, against you know, the Fed being able to accomplish what they want to accomplish, you know, all these things, you know, this is why. I mean, this is why, because these countries see the end of the dollar coming. We talked about when the Fed made his comments that there would be no tapering, Bernanke that is, that to me kind of put a nail in the coffin for the dollar. And so the rest of the world is preparing for this, and at least certainly in the East, and and so maybe we should too. Just food for thought there. The other thing we look at from time to time is the capacity utilization. This one is from crystalball.com. I like this chart. And the blue line here is your capacity utilization numbers, whereas this kind of amber orange line here is your inflation. So you see when capacity utilization breaches that 85 level heading towards 100, it gives you a heads up. You can see once this back around the early 1970s, capacity utilization breached that 85 level. Interest rates were low at the time, but began moving higher once capacity utilization really got going. Things began to heat up, and it's a good indication of, or gives you a good heads up that maybe inflation is coming. Again, you can see here breached that 85 level. Interest rates were low, and then moved much higher there. Here we are currently. You can see capacity utilization nowhere near the 85 level. When it's low like this, you're talking times of slow growth. Well, in fact, it says low capacity utilization signifies slow growth or recessionary times and excess facility costs. So that's what we're seeing now. But we keep our eye on this because it may give us a heads up that higher interest rates, inflation, all that stuff may be coming. Right now, the Fed is fighting a natural. The economy wants to naturally deflate, and it's fighting that still to the tune of $85 billion a month, $1 trillion a year, trying to fight that deflation as this Fed, whose days are numbered now, and Janet Yellen will be taking over. But this Fed was a student of the Great Depression and felt that they tightened things too quickly, and it caused the deflationary depression that we had. So hence they're printing like crazy now to avoid that. So again, gold and silver, to kind of get back to that, is, again, in terms of this, we're talking trading here, but I'm talking about if you're using this as a hedge against reckless governments and what may be coming if the dollar does eventually fall apart. All right, I'm already almost 20 minutes in here, so let's go to some of these option candidates here. So these are stocks that I've got on a watch list here that we're going to be looking at. I'm going to start doing some more research on them. I just got the kind of the initial list. You can take a look at these on your own, but these are basically stocks during this period of the year, between the middle of October and the end of the year, have been uptrends since, well, some of these have been bullish during this period each year over the last 10 to 15 years. So for instance, U.S. Steel here, X, let's just take a look at this. This stock during the period between the end of October and the end of December has moved higher every year for the last 15 years. So it's an interesting play. Now currently, let's just see what the pattern is here. It's a wave 5 up. So we'll have to see. Again, I want to take a look at these. I'll be doing some more research. If this does correct back to this level, this may be a good buying opportunity just below 20 there. And that would be something you could take advantage of with options. Going out, you got to go out past December. Maybe just an at-the-money call, just some basic stuff, just to take advantage of this kind of seasonal trend in some of these. So I'll do some more on these. Again, I'll just pop this open here as our scanner. If you want to kind of write down some of those names, put them on your watch list, and we'll take a look at these more in depth next week. All right, so hope that's helpful. Got a little off track maybe this week, but sometimes it's good to mix it up a little bit. So we'll do it again next week. So have a good rest of your trading week. Um, Nothing huge on the economic data front. CPI, I think, on Wednesday. Monday tomorrow is a bank holiday. Markets will be open, so maybe a little quiet. And then always, any kind of shutdown, reopen on the government front is going to be big news. So watch out for